Welcome back to Market on Close. I'm Marley Caden. It's now time to get a check on our commodity markets. For that, we'll welcome in Phil Strebel. He's the Chief Market Strategist at Blue Line Futures. Phil, thanks as always for being with us today. Love to just start with macro thoughts on today's session and the week as a whole.
Well, today's session was actually quite quiet, although we did see a lot of big movements here across the commodity complex. We had big sell-offs in the precious metals markets. The dollar index rallied. We have U.S. equities continue to march higher. And it seems like there's been a rotation that's really taken place. If you go out throughout the whole week, it was a lot of talk about trade deals, tariffs, and a lot of deals being made. So we've got more clarity going forward as far as what we're expecting here with regards to those trade deals. So I think that over the next week, it's going to be really a paramount week with a lot of volatility, a lot of headlines. And I think that that will be what sets the stage for the Fed ultimately cutting rates in September.
All right, so you mentioned that we saw some weakness today in our metals, gold specifically, as we saw the dollar strengthen a bit. Do you think we're going to see more weakness in gold?
Well, so the problem with the gold market is you have a number of different drivers in there, everything from geopolitical risks to these trade tensions. And that's what's really fueled the rise in the gold market over the past 6 months. And now you come into a situation where many of these trade deals are being made. If you look on Wednesday, once there was a framework that was laid out for the European Union, and we also have the trade deal with Japan, that's where gold prices had peaked, and you start to see rates start to rise. The dollar index also snapped back as well, and that's where gold futures have gone through about $120 worth of liquidation. Silver's also seen about $1.50 move lower since that same time period.
And so silver was the next thing I was going to ask you. I feel like I was just talking about them reaching a 14-year peak, and now they're down on the day.
Yeah, and if you look at the ETF flows, and this is both in gold and silver, they're really painting a different picture. Year to date, percentage change up about 10% on both of them. Silver has done a fantastic job where the gold silver ratio was over 100. Now it's about 85 to 1. It's the problem with the silver market is you had this big surge here to get silver over to the United States before any tariffs really come in. We saw tariffs announced in the copper market. Copper futures continue to move higher, but they are backing and filling here today. But if you do have agreements made with Mexico and Canada, Mexico being one of the largest producers, the largest producer of the silver commodity, and then you get Canada, which is a prominent supplier of many different commodities out there. If trade deals are made, it's going to ease that flow and ease that strain on getting those commodities in here, and that's where prices have to reset.
And we have to talk about Bitcoin. I felt like Bitcoin was on this tear. Now we've had back-to-back weekly losses for Bitcoin. A really interesting day today, though, dipping below 115,000, rising higher than 119,000, which is a much wider swing than we typically see for Bitcoin in a day. But I couldn't find any significant headlines driving any of that.
So you got a couple things. The volatility has been coming in on Bitcoin, and prices have been stuck between 116,000 and about 121,000. That dip may have filled that gap that we saw on the charts, or got close to filling the gap here. I think that the price momentum is still to the upside once flows start to come in. Something that you were missing is that July contract is going to be set to expire here today on a lot of the futures contracts, specifically around the cryptocurrencies, or we're approaching a time where traders are going to have to roll over into the next contract month out. And a lot of times in any commodity, when you get an upward movement that's been so great over the course of a contract month or cycle, when traders need to make a decision on whether they continue to roll it over, oftentimes and not, they'll say, nah, Phil, I'm good. Let's just book the gains right here. I'll wait for a pullback and look to re-enter the market. And I think that that's what we're seeing in the crypto space.
So as I was looking at some of the numbers, the trading volume was up about 40% today. Was that people buying the dip?
I think so. I really believe that the dip buyers are here in all of these cryptocurrencies. And yes, you have rotations between altcoins and things like that. The XRP futures have had incredible amount of volume, especially over the last week and a half, and the Solana one as well. So people are really starting to gain some exposure, and they really like having that leverage aspect as far as being able to participate in these cryptocurrency space where you're not buying the coins on a wallet where you're tying up all your capital, or not buying the ETFs, which are going to limit when you can get in and get out as far as time frame. I think that the futures contracts kind of fill a lot of different buckets that traders are looking for.
And I want to move to oil before we have to say goodbye. Talk about crude. Looks like we're pretty close to like a 3-week low right now. Is this tied to any of this news I saw coming out of the potential for more oil supply from Venezuela?
Well, I thought that that might have been part of the catalyst as well. And you don't want to put down, President Trump saying that get oil prices lower and exclamation points on his Truth Social, because remember when he said, now is a great time to buy stocks, that also marked the low on the stock market with the April tariff. So I think that he has an agenda to try and get prices to come down here. And that support level is really the 63 to 65. We see a lot of traders coming into that level, but is $80 crude oil possible? 90, 100? We didn't get it with that last round of geopolitical tensions. So I think that really we're kind of stuck between a rock and a hard place, with price momentum slowly drifting lower.
So, I mean, we've been pretty range bound. We fell a little bit out of it today, but, on the lower end, how far can we continue to go down before you expect to see some sort of correction?
Well, as far as prices on the downside, I think we could realistically go back and test the high to mid 50s. I don't want to see that happen, being a commodity bull and everything, but the reality is that prices are going to go where they need to go, and you're seeing increasing supply out there. You're seeing demand, which could start to weaken a bit because some of the economic data, the labor data, is starting to show some cracks in the economy. So we might start to see that slide off a bit, and really OPEC wants to produce as much as possible right now, so to try and take advantage of higher prices while we're still here. So I don't see any real big bull market in the oil market. I really see prices kind of chopping and drifting lower to sideways.
Phil, we appreciate it. Thanks for talking all the commodities with us today. That's Phil Strebel from Brookline Futures. And